Last little micro on. It's set right to the low, that new, there we go. We're out of here, man. That's it. A lot of fun. What's up, guys? It's Tremaine here, the most disciplined trader on YouTube. Here is the trade I took this morning. Now, our live stream in Discord was supposed to be a tape reading stream. I wasn't expecting clean price action the morning of FOMC, but I was wrong. So only half of this trade is recorded because I entered on my phone, and I logged in later on the live stream, logged into my broker, and we just walked it through the rest of the trade when it was already halfway panned out. So there will be a trade breakdown at the end of the footage, but just know only half of the trade is recorded, but stick to the end for the trade breakdown so you can get the full picture. All right, see you at the end of the video. And that's why when I was on vacation and I was on a cruise and I wasn't live streaming and all that, and I was seeing everybody like get wins, that's what I love to see, man, because they weren't copying my trades. Y'all were here getting wins in the chat. Y'all were doing your own analysis. Even if you weren't taking trades last week, you were still like tape reading and just calling the levels and the targets. Man, I was looking at my phone. I was just smiling because that's what it's about, man. 'Cause I'm not going to be live streaming forever. Maybe 3, 4, 5 years. I don't know. I don't plan on live streaming when I'm 40 years old. But like knowing y'all are like doing this stuff on your own, that's what it's about, man. Like I love that. That's what I like to see. We're inside of this imbalance here. Again, for bullishness, I wouldn't want to see that completely close in. So the fact that we did this here, I'm glad I took the bulk off at relative equal highs. For at least a year. No, I'm definitely going to be streaming for at least 3 more years because I'm trying to get a house next year and everything, and I want to have an office space and I want to set it up, and I'm going to be streaming for a while. But when I'm like 35, 40 years old, man, I'm trying to have kids and a family. I'm not, you know what I mean? I still want to have the Discord and the YouTube channel, but man, you know what I mean? Go independent. No problem, Brianna. The trading in the Discord, actually, it helps. Y'all are like family to me, man. Like it's, you know what I mean? I like coming out here and reading the chat, chopping it up with y'all. Like I love trading. Like I'm telling you, it was so hard to. It doesn't feel right when I was on a cruise. It does not feel right to be away from the Discord or be away from the charts. I wasn't having an impulse to press buttons, but I just like wanted to look at the charts. Like I wanted to live stream. I wanted to talk about price because it's actually a passion. So it's peace of mind. Like it's relaxing. I was waiting for ICT to upload some videos so I could watch it. It's like I love this stuff. You don't love us like that. I swear I do. I swear. Next time you're saying not to show a trade you took, it causes FOMO. If I don't show the trade, it's a teaching point in showing the execution. It's a teaching point. So I know I said I'm not going to trade today, but when we're walking it through, showing the trade is showing how I applied what I was talking about when it was just a naked chart. So we go through the analysis and then we screenshot that. We go through the analysis and then you see the result of the analysis. So it's kind of like a before and after. It just brings the whole teaching together. And I always tell people, if you battle with FOMO or if you ever feel tempted to copy my trades or just jumping in a trade because I'm in it, I always recommend them to watch the recordings. That's the reason why I keep the live streams up. for, you know, the whole week, because I don't want people to feel tempted to copy my trades, because then I'll be hurting you more than I'm helping you. So if you battle that, just come back later, get you some breakfast, or after work, you know, come check it out then, and you'll get just as much value. But yeah, that's not good. Gonna go ahead and probably close the full position. I think we just fell short. This is that old, the heck? Okay, I don't know what happened with that. Was it a sell limit and a sell stop beneath? There we go. It's 1 micro, I don't care, but my stop is beneath mean threshold of the balanced price range. We have this single pass down with this inefficiency, this single pass up with this inefficiency. I'm seeing this as balance, so I'm taking midpoint. Comes in at 997. My stop is at 996. It can run through that because this is all I require of NASDAQ for the morning session. Anything higher is really just extra. We've taken out the buy side. And then again, that is your New York ATM model delivering like clockwork. I mean, that's it. W's in the chat. We'll still get W's in the chat. Obviously, I didn't take it live, but we outlined it. You can't get any better than that, honestly. It's a W. We'll take it. Big dubs, big dubs. And I think I'm going to get off here because, again, we are meeting back for, yeah, big dubs in the chat. Beautiful trading day. Beautiful trading day. But yeah, I think we're gonna get off early because we are meeting back here in a few hours for our webinar. Again, that's at 1:30 p.m. New York local time. So that was at 10, 11, 12. Literally like 3 hours from now. So I want to hit the gym, grab something to eat, and I can get ready for that. I guess we'll wait for this last little micro to do whatever, and then we'll get off of here. I won't be tape reading FOMC. That's what's up, Tyler. Love to hear it. Took it on demo. Nice. You entered on the 15-second. That's what's up. Kind of mad I took this trade on paper. Now, that's a W, man. Paper trades are W's because that's experience. You're gaining confidence. That's a big W. The money comes later. That's a big dub. Would you still have taken the trade if you didn't have the seconds chart? Yes. I would have just used the high of the inversion fair value gap. This here, as soon as we close above the high of the inversion fair value gap, the next candle opens, trades down, that's your buy. And then the logic is we don't want to see us trade in the lower half. So there's entries on the 1 minute. Last little micro on. It's set right to the low, that new, there we go. That new week opening gap. TP hit. We're out of here, man. That's it. That is it. A lot of fun. All right, so hopefully you enjoyed that little piece of footage. Again, I apologize for not having the full recording, but it was kind of a last minute trade. So quick trade breakdown. This is only going to take a few minutes. It's really nothing complicated, I promise. But we open at 9:30 here, and we trade down, okay? Now, we're in the live stream. We're watching this, and the thought process is whenever we open at 9:30, and we trade down aggressively like that, instantly your mindset should be somebody is chasing that. Well, really not somebody. 90% of people are chasing that move going lower. They're seeing this as, man, NASDAQ's coming off the opening bell hot. We're going to melt. This thing is going down. I love that because when I see this open at 9:30 and trade lower, I'm seeing narrative. Sell side liquidity taken here, relative equal lows. Trading beneath the midnight open, trading beneath the 8:30 open. That's Tremaine's model. Where's my entries? Beneath both of those opening prices. I still trade it. I get a lot of questions about it. So I'm seeing this move lower after the opening bell as a Judas swing. And I told the stream, this thing can drop 1,000 points. I would not care. That's not a trade I'm interested in because shorting anything here or shorting this fair value gap here or shorting anything down here in this region, that is too cheap. I'm selling something so cheap, it doesn't make sense. I want to buy when it's cheap. I want to sell when it's inexpensive. Well, if we're trading down here and we're in this region, are we cheap on the day or are we expensive on the day? Well, we're beneath both of our opening prices. We've cleared out sell side. We traded into our current new day opening gap. We're in a discount and we have relative equal highs here. And the narrative is people are chasing this move going lower. So you have so many things panned out in your favor. Buy side taken, take it higher, and fade that initial move after the opening bell. Now, we're watching the 15-second chart. I said to observe this fair value gap. I want to see this low stay in place, and I'm watching this inefficiency, and I want to see if we can get speed above that high. This is all going to sound like I'm just now making it up, but people in the Discord can vouch for me. We're watching a 15-second chart, and I wanted to see displacement above that high. I wanted to see this low stay in place, and we're looking at this specific fair value gap right there. And if we respected that and took out this high with displacement, I told them that's where I would be interested in going long. Long entries here at the high of that 1 minute inversion fair value gap. I'm buying 6. And this is a live account. My real funds, I will be withdrawing those profits today because I'm done for the week. And I'm buying 4 more for a total of 10 contracts long. And my partials, if TradingView wants to load, we have relative equal highs. Okay, 8 out of my 10 contracts come off there. Retracement into the fair value gap, bodies respecting it beautifully. Trade higher, taking 1 more off at the buy side, New York ATM model. That's our model we have exclusively in the server. And then last contract on for the bottom of previous week's new week opening gap. All right. Inversion fair value gap as we're trading and closing above the high end of it. Okay, once we close above the high, let's zoom in real tight here. Okay, I'm telling the group, I don't want to see us revisit the lower half in this inversion fair value gap. Okay, all these wicks in here, back and forth, I'm treating that as a balanced price range. So once we get this closure here, if you weren't already long, this candle can open, trade down, tap the high in the inversion fair value gap. That can be your buy right there. Or if you're like me, that can be a pyramid entry for you. And then we rally away. We work the opening price of this down close candle. That's a bullish order block. And notice how price is not interested in trading back to the lower half of this inefficiency. That's what we want to see. We get speed above that high. We're looking for that as well. Fair value gap stays open in this price leg. As soon as this candle closes, I don't want to see this traded to. I'm treating that as a measuring gap. I want to see this entire thing stay open. We open here, trade higher into our buy side, then trade down. Stop loss is beneath the candle that holds the fair value gap. You see it was just missed by a tick. Wicks do the damage, but the body's telling you the story. It's respecting that inefficiency. Include the volume imbalance. Trades higher, hitting my next limit order, completing the New York ATM model there. And then my last contract for the new week opening gap, I highlighted this balanced price range. So if you take this inefficiency here and you take the bullish one here and you get midpoint, that right there is balance. So my stop loss is just 1 tick beneath that. We should not have any interest in trading to this fair value gap. So how do I know which fair value gap is going to stay open? Why do I want to find support in this fair value gap here and not this one? Well, I'm seeing this as an actual inefficiency. This isn't imbalanced to me, okay? This is a balanced price range. We have sell side offered on this down close candle, immediately followed by buy side offered, and then we left that range. So this here has already been efficiently delivered on both sides of the marketplace, both sell side and buy side. This here is just buy side delivery. So that's the support that I'm looking for price to respect. and then a little bit of extra flair. We trade down to an order block, these 3 consecutive down close candles, take that opening price, draw it through, hits it there, and then there you go. There's your exit. So that is it for the trade breakdown. Fading that initial move lower, the Judah swing, sell side taken, allowing price to work in a discount, accumulate those sell stops, and then going long, pyramiding, partials, relative equal highs, just a bread and butter kind of day, buying beneath the midnight and 8:30 open. That is Tremaine's model. I had that teaching on my YouTube channel. So hopefully you found this one insightful. We have a public live stream tomorrow. It is a bank holiday, Juneteenth. So we will have a tape reading stream publicly on YouTube. Everybody could join. And then Discord members will have another tape reading stream on Friday. All right, so be on the lookout for that. Love y'all, man. I'll see y'all when I see y'all. Peace.